repeat everything you did in the Wise thing yesterday.
Well, I'll start recording, and I'm sure if somebody joins late and they have a question, we can always answer. Or you can answer, Chris. No
Oh, thank you.
worries. Okay, so I'm just gonna get going. Um, I was doing a live for my company yesterday, so I'm gonna be repeating a lot of the same stuff. But you guys took the course, so you know more, and these are easier to do because you know what I'm talking about. Whereas with a larger crowd, I think I had 500 people there, and it was I have to dumb it down, but not for you guys. So where are we at? Well, we all agree this is an 80-day cycle low. Most likely, I want to touch on that in just a minute. I think it's another triumph for the forecasting model because the date that I had was Jan 3. Jan 3 is there, it's here. Doesn't look like much. But all the testing that I've done, when I share the 80% probability that it's going to hit a low on that date, I think it catches basically 95% of 80-day turning points. Well, that is with a 5-day margin of error. And so 5 days before Jan 3, we had the low here on December 30th. And actually, the forecast, and this might seem like a small detail, but it's not. The forecasts are not based, and somebody asked me about this. The forecasts are not based on the day of the low. It's the first day of the rally. The forecast for a top is the first day of a sell-off. So technically, the low is on the 31st. Well, technically, it's not on the 31st. It is on the 30th. But the forecast should have been, in order to call it accurate, is for the 31st. And so it was off by 3 days. I think that's pretty good. There's another two, and that's something that I didn't want to. I was super busy with something I want to share later. Over the past couple of weeks, I've been kind of absent from the group for that reason. But one thing that I wanted to share is that there were another 2 dates, and I rechecked yesterday. I can check again. I have the file open right here. There were another 2 dates for lows in January. One was the 18th. 5 days earlier, we have this low here on the 13th. So I think, and that's a more powerful low. Now the reading, the intensity for this date, according to this forecasting thing, is was 95 and change, 0.95 and change. So that I actually thought of including it or not. And what I told myself is, I don't want to bloat the forecasting dates. I mean, the cutoff is 1. So anything that's below 1, I'm not going to show it. But since January is a pretty empty month, there are literally no high forecasts for January. None. I mean, the highest reading for January for the highs, there's only a few dates, and it's like 0.7. That's a little too low. 0.95, I thought might produce a low. That's why I shared it in the group. I said, well, we also have this one on Jan 18. And there's another one on the 26th, if I'm not mistaken, Sunday. There's another forecast for a low on the 26th. The reading for that, the intensity is 0.89. So it is a little low, but it is worth keeping in mind, in my opinion, still, because again, just the fact that there's any reading at all means that the model has picked up something in the past for that date. 0.85 is low, but I would say that on an empty month where there's nothing going on, 0.85 is pretty good. So I may, based on this experience, I may rework the way that intensity is calculated because some months are very busy. March and April are very busy. So you should only pay attention. Perry, thanks for sharing that. You really should only pay attention to like high intensity readings. That's what I shared. Those are the dates that I shared in the file. What I'm trying to say is a reading of 0.9 in March or in April probably doesn't mean anything. But a reading of zero point 0.9 in January when there's nothing going on, it might mean something. And I think it has this one here, this 0.95. This 0.89 for this Sunday, we're in the orb for that. We're in the range for that low. It might produce the high, not the high, sorry, the breakout, because if it doesn't break out now and it goes down, that's what I want to get into. Because as encouraging as a price action is, I think we need to break out now. Because if it doesn't, then we're probably confirming a 16-month top. It's not 16 months really. It's the actual cycle is about 11 months. I'm not going to update that on the course itself because the tools that I use to detect the 16-month cycle are perfectly valid for detecting an 11-month cycle. It's within the range. It's within the allowable variance. But this cycle actually tends to be quite close to 320 days. 320 days normally, not in the 2019 through 2021 cycle. That's an exception, but it seems like an exception to the rule rather than, I thought maybe it's a new norm, but apparently based on this cycle, based on this bull market, one that started in November 22, no, the last bull market, the last 4-year cycle was an exception, an anomaly. I don't know why it had these long 16-month cycles, whereas every other cycle is closer to 320. Not always, there's some exceptions. The 2017-16 cycle has no such cycles at all. It's just an 80-day cycle and then it just runaway train to the upside. Anyways, long story short, this dashed line that I have here, this is the 80-day low VTL. Now, some of the stuff that I don't teach in the course is, what do I do with this VTL? Well, basically, this 80-day VTL, when it's crossed in a bull market, it means you're not in a bull market. And if you remember the definition for what a VTL should mean, if prices cross below the 80-day VTL, then a cycle of higher magnitude than 80 days has topped out. Now, there's a 160-day cycle also in crypto, or a 240. It's 160, 240. That is not a strong cycle. That is, it comes in and out. It blends. It actually blends with the 80-day at times. I tried to. That section was super challenging to do in the course because I didn't really know how to explain that this cycle, you might see it, you might not see it. It is actually quite similar to the 40-day cycle. There's also a 40-day cycle in crypto. That one is not super dominant. It can go in and out. I have a tool now that you might want me to share this with you. I might share this script later. It's called Cycle Finder. It has a lot of lag, but it's actually a neat oscillator that finds the cycles. And if you use that tool, you can always find a 40-day cycle. It's always there. But when you look at the price action, it doesn't look like much. And so I'll share the script if you want later. Problem with that, Cycle Finder indicators, it has a ton of lag to do what it does. And so it's only useful for facing cycles in the past and understanding how a market cycle, specific market cycle behaves. What it does is it isolates a frequency. You need to set it using filters, but once you do, it isolates a frequency. So you can find a 40-day cycle in Bitcoin or in crypto. You can also find a 160-day cycle quite regularly when you use this tool, when you isolate the frequency. But when you look at the price action, it's not a dominant frequency. Long story short, this VTL is crossed. We're not talking about a 160-day top. We're talking about a 16-month cycle top, which would be too early. It will be way too early for that to happen. Last time we had that crossover of the VTL was here in June. We must have this. I'm sure we discussed this in the past. When prices crossed below this VTL in mid-June, right here, what it told us is that March was a 16-month cycle top. What that means specifically is that we're due for a very long consolidation. This will last at 8 months. If you look at the date of the breakout, it was a long time. It was over 200 days between the high in March and the breakout, not the low, the breakout. The low took about 6 months to form. Then we had to wait another 2 months for the breakout. That's what happened when the 80-day cycle VTL was crossed. But it's not what happened, but it signaled that that is what was underway. The same thing is true in 2023. We can't go beyond that because every 4-year cycle, this, in my experience, has been different in crypto. Every 4-year cycle, there's a lot that rhymes with every cycle. Then there's a lot that's different with every cycle. So I would not go beyond November 2022 to look what happens when a VTL, when an 80-day cycle VTL is crossed. That said, believe me, go back, do it yourself, find these 80-day lows, draw the VTL. It's always a big deal. Sometimes it's not, but usually it is. In 2020, there was one crossover. Prices only stopped for about a month. But in this bull market, that has not been the case. Every time these VTLs are crossed, we're in for a long consolidation. Now, this is the time it happened. It was in August. Remember, because I was in Greece when this happened. I was having dinner at some restaurant. I saw prices crash, August 17. And that confirmed that we were in a 320-day, 16-month consolidation. It only lasted a while longer after the crossover. The low was on September 11. We did have to wait a couple of months for the breakout. Now, this consolidation from 23 was very mild in comparison compared to what we saw in 2024. Again, another anomaly. Typically, as you get deeper and deeper into bull territory, the consolidations, they tend to last less. The price action tends to be more bullish. We're not really seeing that in this bull market. So, long story short, what I'm trying to say is I don't want Bitcoin to cross below this line, this 80-day cycle VTL, because this time it will be too early for that to happen. I mean, if you just look at the 320-day cycle rallies that we had before, now this one from 2023 was the first year of the bull market, the first full year. These years, the first year in the 4-year cycle, the first year tends to be by far the weakest. Usually there's no price gain at all, or if there's any price gain, it comes very late in the year. So 2023 was actually a pretty bullish year in comparison. If you use like the first years of a bull market as a benchmark, 23 was one of the best, actually. But that being said, the rally lasted, let's see, let's count, because I don't know, but at least 6 months, I would say. So the low is November 21. There's a double bottom there. Let's start with November 21, which is the lowest close. Then there's a top here in July. That's about 8 months. So 8 months rallying in 2023. For that 16-month cycle, the rally component, 8 months. I'm rounding. Now let's move on to the next one. This one here, 6 months, 184 days. Between the 16-month low and the 16-month top, 184 days. What about now? Well, if Bitcoin were to cross this VTL here, the rally, I think, is about 3 months, if that. So the rally would be, there's a double top here. We can say 100 days, and we can be super charitable and say, no. The actual high was May when Trump was inaugurated, 136 days, 4 months. So we have an 8-month rally, then a 6-month rally, and now what, 4 months? That would signal to me that the 4-year cycle high may be in, or very near. So we don't really want to see that, which means, again, as encouraging as the price action is, it really isn't if you look under the hood a little bit. Bitcoin is just too close to closing below an 80-day VTL for my comfort, at least. Let me delete some of these lines. Just too many lines. It's a little too close. Now, this can all go away. This can all be, all of these sins can be washed away if Bitcoin just goes mental to the upside like that, and it puts some distance between itself and the VTL. That's what you want to see. Some distance between prices and the 80-day low VTL. Right now is way too close. In fact, I think right now it's sitting at about 100K. Bitcoin crosses below 100K. I'll be worried. I'll be worried that, not that the bull market is necessary. By the way, if you have any long-term positions, I'll tell you what I'll do. It closes below the VTL, I will own no Bitcoin. None that is unhedged, at least. I will sell everything. I might come back if I get a buy signal, if I get a breakout of the 80-day VTL, or some type of some type of trade that one of the ones that I teach in the course is this scalping entry, where I take the 20-day high and I connect it to the 80-day high and I draw that VTL. And then when it breaks above, I buy that. Not saying I am done trading. I will never be done trading crypto, but I will be in cash if I see this VTL crossover. Now, there's one caveat to all of this, which is that, as you know, I use a computer model to find these cycles. And I built some rules as to what an 80-day cycle low should look like before calling it an 80-day cycle low. Basically, it's this. You have to wait 20 days, about 20 days, between what you think is the low and current prices. So you can only confirm a low 20 days after the fact. I've done this because it avoids noise. And it has not been 20 days, I don't think, since the low. Or rather, it's 20 days, actually, let me correct that. It's 20 days from the filter low. So I don't think we're there. So this is the filter low. Blue line. Blue, just so you know, is always the 80-day filter or the 80-day VTL. And it has to be 20 days from that filter low. And I don't think we're there. It's only been 10 days. We need another 10 days before my computer model confirms this 80-day low. And therefore, once that low is confirmed, we can draw the VTL. That's why this line is dashed. Cannot confirm it yet. Now, again, maybe your work is different and maybe you disagree. Maybe you're ready to say, and I think it is. Honestly, I do think that we saw the 80-day cycle low take place. Well, if you use closes, it took place here, Jan 9. If you use the actual low, it was on Monday, Jan 13. I would agree with you, but I have a computer model that's done plenty of testing on, and that you should, it's a good idea to wait 20 days or a quarter of the, actually, you have to wait the same as the cycle length. So this cycle length is 20 days. You have to wait 20 days. This has to be the lowest low within 20 days in the filter, not in the price action, in the filter. And so, like I said, it's only been, we use the filter here. The low took place on January 4th in the filter. And then we count, we would need to count, it's actually the filter length -1. So it's 19 days. We're not there. What I mean by that is that, let me hide everything so that make sure this is clear. I'm not sure if I'm making sense or not. Let me delete. So forget everything. We look only at the filter. Forget that there's lag in the filter, whatever. That doesn't matter. We have a candidate for an 80-day cycle low, but you need to have 20 full sessions after that low. You need to count. Now, why is that? It could be because the 80-day low is actually not in. That's why I do that. So forget everything. You look at only the filter. This is very easy to do with a computer model. And then you count 20. -1. That -1 is because it can be exactly 20. So you can set it to equal to or greater than 20 or just 19. Greater than 19. So that would happen on, well, when would that happen? It would happen in 9 days from now. So 9 days from now, about a week from now, what is that? Next Sunday of next week. So Sunday of next week, if prices are still above this, but actually they're still above the low that Bitcoin made, then this will be confirmed as an 80-day cycle low. So this is, long story short, I'm trying to say is this is not an unconfirmed low. This is in my own work. This is what I do with a computer model. The reason, again, is if prices go below that, then there's a very good chance that this filter turns down and we get another 80-day cycle low sometime late January or early February. There's still that possibility. Now, if I take you back here to, this is kind of what happened here. For example, here on, this is March of 2024, something similar here. You can see that prices were rallying, and indeed, if prices had broken out, this filter would have turned up and we would have been able to count 20 days from this low here. We would have been able to count 20 days and we would have been able to say, okay, this is an 80-day cycle low here, March 20th, but that's not what happened. You give it some time. Basically, that's what this rule does. It gives it time. You need to give things time to confirm that this is indeed a cycle high or a cycle low, a cycle turn. So it's unconfirmed for now. Now you can speculate as to what the filter is going to do based on the price action. And if Bitcoin breaks out, then you can bet that this filter will continue to move upwards over the next 9 days. And you don't have to wait in that case. You can just say, okay, that is the low. Now, when can you not say that? As long as prices are below the high, the green horizontal line. This is the last 80-day cycle high. As long as prices are below that, you cannot say, it's too soon to say, this is an 80-day cycle low that took place here between Jan 9 and Jan 13. And for that reason, you cannot use the VTL. And if you can't use the VTL, then you can't sell because the VTL was crossed. Story short, it's hold our horses. It's a little too soon to say. It's a little too soon to say that this 80-day cycle low is in and that this VTL signals that the 16-month top is in. The problem is we haven't seen anything even close to this in the past. Like in previous rallies, Bitcoin never even gave us this worry. Now there's only one really. This correction here, this post ETF launch correction from January, Bitcoin never got close to the VTL then. We never had any reason to worry that it might be crossed. I mean, maybe here in early February, I think it was, but this was way too soon to even say that this was an 80-day cycle low. By the time the low here in late January looked like it was an 80-day cycle low, prices were way above it. They were way above it. We already knew. I already knew this is an 80-day cycle low, and prices are so above, I don't really care. So this looks more to me that the fact that we're still dancing close to this level, it rhymes a lot with June 24. That's not the right rhyme in this case. It's I call it an off cycle. It doesn't really fit with this idea that we're in a 16-month rally within a 4-year rally. It doesn't fit that. Now, again, it can change if it rallies, but it needs to rally strongly. Now, you can see here that it kind of is trying today. We did get a higher close on Tuesday. Let me delete some of these. We got a higher close on Tuesday. Delete, delete, delete. So actually, this close here on some exchanges is a little higher than this close here. Now, I don't know if you remember on lesson, I think it was lesson 8. On lesson 8, I say, if you get a higher close on the 80-day cycle, there's over a 90% chance that Bitcoin's going to follow through. Well, technically, on some exchanges, we actually got that this week. 92, I think it's 92% chance of success on that trade. Problem is, I meant to check before the class. I meant to check if we have ever seen a close that is slightly above, but I didn't have time. I don't think we have. Just off the top of my head, I don't think we've seen that before. This would be a retest of high, not really a higher close. Problem is, an exact retest for a computer model will have to be the exact same price, which is extremely hard to get. But in this price feed, Bitstamp, this I already checked, closing high on December 17th, the last 80-day cycle top, is 106.187. The close on Tuesday, Jan 21st, 106.149. So it is lower, slightly lower. Now, my doubts will be put to rest if we can see like a close at 107, 108, 106. I'll take 106. But as long as we're just banging on that 80-day cycle top, failing to cross above it, then yeah, this doesn't look so strong to me. Now, if we look at Solana, I'll get to everybody's questions in just a minute. I just want to do this little presentation because I know I've been a bit absent from the chat. Solana looks good. I mean, we already broke above the 80-day top. It looks like it might break above. Again, we have a second close above. Now, interestingly, I checked the 80-day breakouts on Solana. They have never failed, not once. Every single time you bought Solana, when it broke the 80-day cycle top, following the rules that I teach in lesson 8, which is that you use either the 80-day VTL or a break below the 80-day cycle low, that has never failed on Solana. It's 100% hit rate. Of course, that's because there's not a lot of price history on Solana. But if you bought every single 80-day cycle breakout, you always make money. And we have one such breakout. On Saturday of last week. And it looks like today we may have a confirmation. Sometimes when these breakouts are very, very close, I like to wait for confirmation. We may get confirmation on Solana, which would be pretty encouraging. Now, I will say the fact that this trade has never failed on Solana means, well, one of them is going to fail. There's no such thing as a 100% success rate on a trading strategy. So at some point, we're going to see one of these trades fail. Maybe this is the one. We never know. I mean, it's two sides of the same coin, I suppose. But just take that for what it means. Buying 80-day breakouts on Solana never failed so far. But I really want to see that happen on Bitcoin. I really do. If it doesn't happen, then I would hope that my computer model can confirm this low here on January 9 so that we can draw the VTL. Because for those of us who have been long crypto or Bitcoin all this time, I mean, this VTL is so close to the price action that if this low is confirmed, let me draw the arrow on it. If this VTL is confirmed, turn it into a solid line. And then let's say prices rally slightly, they just go nowhere for about a week, and then they sell off. We're going to get a VTL crossover above 100K. And so that's a pretty good exit. It reminds me a lot to what happened here in mid-June. Notice that the VTL crossover, let me draw it again. I think it was mid-June, the exact date. But it gave you a pretty good exit. The all-time high then was about 73K. You have a VTL crossover, 65, 66K. That's a pretty good exit. Not only that, you get 1, 2, 3, 4 trading days, and you can add these too, like 5 trading sessions where prices are barely moving and you can take profits already. So that's a silver lining, even if this rally is already fading way too early. The good news is you can probably follow a strategy and cash in at about 100K, whilst also sticking to sound trading principles. Because I can tell you one thing: if you have a profitable position on Bitcoin, any crypto asset, and prices are crossing below the 80-day VTL, you should be taking profits, at least on part of your position. Personally, this is just me personally, I won't sell anything. I'll buy puts. I'll be 100% hedged because I fear what this means. This crossover would mean so early in the cycle. I'm concerned about what that means. I'm concerned that it's just trying to hit above that 106K level and just not able to cross above. So for now, it's a little too early to be thrown in the towel, but we're getting close. Unless we get a breakout, we're getting close from trend change, basically. That's what the computer model that I have calls these trends bullish when the prices are above the 80-day cycle top. When they cross below the 80-day low VTL, the trend shifts to neutral. Now that's useful because I can do studies. I can look in the past to see what happened. How long does your average neutral trend last? Does it even make sense to call it a neutral trend when these VTLs are crossed? It allows me to study what happened in the past. I can tell you it's a pretty good indicator. So crossing below 80-day cycle VTL during a bull run or after a bull run is a yellow flag. It doesn't mean the bull market is over. It means it probably is, though. And this is the last year of a 4-year cycle. And usually when Bitcoin breaks below this VTL in the last year of a bull cycle, it means maybe the rally is already fading and we're running out of momentum. That's kind of what happened in the 21 cycle. Bitcoin breaks the VTL. I have it here. I don't know why I have it drawn. I didn't know that I was going to talk about this, but notice that we close below the VTL here. I believe it was in April or May. Here in April. This is the first time we crossed the VTL in 2021. Bitcoin crashes. That was the easiest crash to predict in crypto history because going into the high in mid-April, market was going absolutely wild. That was pretty much crossing below this VTL. Not only did it cause a 50% crash, and no, I'm not saying the same would happen now. It would not crash by 50% because you didn't have high leverage like we did the first quarter of 2021. Caused a 50% crash in the price of Bitcoin. It pretty much ended the bull market because what was left after the 16-month low was reached is another rally, another breaking of the VTL, and that's it. That's all she wrote, and that's a double top, the only one in crypto history. Just trying to give you an idea, a sense of how bad it is for prices to be crossing below these VTL. It's never a good sign. And sometimes the best thing that happens is prices go nowhere for a few months. That's what happened 2023, 2024. You don't want to see that in the last year of a bull market, and you definitely don't want to see that after a 3-month rally. Usually these VTL crossovers, they take place after about 6 months, 6, 8 months, 10 months, not after 3. You see it after 3 months, pretty bad. And in my opinion, and I don't know if you share this view or not, this has been a pretty bad crypto bull market. A 4-year cycle, it's the weakest I've seen. So I would not be surprised to see it. We shouldn't see it, not my base case. but I would not be surprised. I mean, it's more of the same. This bull market has been quite weak. All right, that's it. That's it from for me. That's what I wanted to say. Now let me get to questions. So Brett had trouble getting into the Discord. Dave, no. He is on the Discord. He is there. I let him in. I talked to him on Discord. I don't know why he doesn't use it, but he's there. I can guarantee that he's one of the members. So the importance of the intensity values is relative to the time of the year, Perry. That's a great question. Let me repeat that. So Perry's asking, is the importance of intensity values relative to the time of the year? I would say it's yes, but it's relative to the adjacent values. So basically, if you have no readings on a given month, and then you have only 3 spikes, those 3 spikes are probably significant that month, especially because you need to overlay cycles with forecasting. You have to overlay both. Now, as we approached January, we knew that we had to be on the lookout for an 80-day cycle low. Why? Because we have the stop here in mid-December. We have a top in mid-December. Prices are going down into New Year's, right? These sell-offs, they take place, they last about 2, 3, maybe 4 weeks at most. When the 80-day cycle is bullish, like this one, the correction, the sell-off component, the down component of that cycle is 3 to 4 weeks. So that landed us square into like mid-January. Now, I looked at the forecast dates, there's not much there. So there's just not a lot of values at all. And so, yeah, the few readings that are above 0.8, they stood out. There's only 3. There's the one that I shared on Jan 3rd. There's another one on Jan 18, and there's another one on Jan 26, which is next Sunday. Now, again, they don't make the cut. The only one that made the cut is the one on Jan 3. That's the one I shared because, again, you can go crazy with this, but you have to cut it off at some point. So 1 is the cutoff. That's actually, these are Z-scores, Perry. I think you understand what that means. So these are Z-score values. These are not the actual value of the index. I do a Z-score, which means it's all standardized, which means you want a reading higher than 1. It is designed so that 1 is the signal. 1 or above is the signal. But of course, I mean, in real life, sure, I mean, a reading slightly below 1 could be significant. What I'm thinking of doing is actually taking a moving average. So I'll take the raw index and then I'll subtract a moving average, and those will be the dates. But again, I don't know. I mean, maybe at some point, let's wait. It's only been a month. I mean, we're only a month into the year. Let's wait 3, 4 months, see how these dates are working out or not. And then I'll share the full raw data set, and then we can find a new way or a better way to find what those significant dates are. Usually I just look for spikes. Maybe Z-score is not the right way to do it. Maybe a moving average would work better. I don't know. We'll see. Moving on. Yeah, that's what Chris said. It's relative to neighboring readings. That's exactly it. Empty month, anything stands out. Busy month, no, you want the highest readings you can see. So again, a moving average maybe fits a little better. The problem is, I mean, I've only been doing this for about a year. I tested it going back to 2020, and 2025 is the only year that I've seen where you have like clusters, like high concentration, high intensity readings within a full month. So you have a full month of high intensity readings. That's March, April in 2025. October, June is also super busy. I was trying to see if that happened before and I couldn't find it. Now I only went back to 2020. So 2020 through the present. I couldn't really find something that looked like 2025. So I don't even know what that means. My sense is we're not going to top out now. We're going to top out in March or in April. This is going to keep going. That's what I think that model is saying. But again, this is the cycle picture, the cycle facing. This comes first, always. These are just forecasts. I don't know. Maybe if we're falling, listen, if we're falling, Bitcoin breaks the VTL and it begins to fall, that'll bet you anything is going to bottom out in March. And then it's going to have a strong rally coming out of March. which is why I'm not done with this market. I would just hedge because I want to see what happens in March and April. My sense is, just like the forecast model is suggesting, we're going to see highs at that time of the year, not lows. Now, usually, again, this is kind of the way the model works. If you have high intensity readings for, say, a high, chances are you're going to have readings for a low also. Now, remember, some of these can invert. So it's kind of like it's par with the course. It's always going to be that way. If you have high intensity readings for, say, lows, you're going to have at least some readings for highs also. It's just kind of the way it works. And so, and again, and these can always invert. So what I'm trying to say is, it doesn't really, just because we have high intensity readings for highs, it doesn't mean we can't see a low on those dates. We could see lows on those dates. And another tip that I have to share on that is take the highest reading. So Perry, thanks for sharing that picture here. I'm going to download and I'm going to give you an example. I know you guys can't see that, but if we take April, for example, on April 16th, we have a 1.1 reading for a low, and we have a 2.5 reading for a high. You should read that as April 16 is likely a high. Why? Because it has the highest reading. The other one is kind of like it's redundant. If you have a very, very high reading for either a high or low, that can invert. And so April 16, for example, is a good example of, and I think it's one of the highest readings in the entire year. That's what the model is saying is, expect a high on that date. Expect a high, not a low. Expect a high. It can be a low if prices are falling into mid-April, but we're likely going to see a high. You're always going to have, you have a very high reading, you're always going to have at least a low reading for the opposite. So that's why that's what I shared the other day, the stats that these can invert. Yeah, because it's never fully either or. It's always a gradient. So so yeah, I don't know if I'm making sense.
Can I have
Chris,
a crack at
yeah.
explaining that?
Sure, absolutely. Go ahead.
So because you're compressing a lot of historical data almost like into the present moment, it has a blend of history of highs and lows.
Yeah.
So the reason you get readings in both directions is because you're compressing history.
Yeah, it's a good explanation. But another way, what I would add to that is, take the date with the highest, take the side with the highest intensity. So if you have a 2.5 reading for a high and on the same date, 1.1, take the high. Just assume it's going to be a high. And
purely because of probabilities, you want to err on that.
Exactly. You err on the side of this is a high. Now, again, if we're falling into April, maybe then it's a low. And another way to know is, you don't have to know. You don't really have to know. Just look at the next date and look what the market is doing. That's the other thing. So if the market is rallying strong, you're not looking for lows, you're looking for highs. Should you ignore the low forecast? In my experience, no. The market is rallying strong and you only have low forecast, but you're expecting a high, then maybe it inverts. So you should always pay attention to those dates. Within 5 trading sessions, usually less. Usually it's 2 or 3. I did 2 tests, one with 5, and I got that 90+% accuracy. I did another one with 3, and it was like 85%. So 3 days is still pretty accurate. All right, let's keep going. So heat map of dates. Chris, I think you had an indicator for TradingView. Feel free to share, where it was kind of like a gradient. It was a heat map of dates. That works. The problem, Perry. Yeah. So Perry, what you're saying is, let me read the question. You're saying maybe making a heat map of the dates too, unless that's what you mean by moving average, smoothing it out. No, I don't mean smoothing it out. No. Moving averages introduce lag. So you never want to do a moving average for these dates. Not what I meant. A heat map would show you when you're entering the range for a turning point. That could work too. It's just that I like having higher precision. And in my opinion, you can just take the highest readings and do just a simple 3-4 day margin of error and look for the turning point within those days. That works very well. And I'll admit, I don't like saying within 5 trading days. I really don't. I mean, I would like to say, no, this is accurate to the day, or maybe plus minus 1 day. but that's not it's not a reality. Now again, these tests are based on the highest readings usually, and maybe after all of this, I'll just share the raw data so you can play around with it. You guys can play around with it. Um, Usually, if you have a reading of 2.5, that is surrounded by high readings. And that's the case in April. I mean, it's surrounded. Actually, let me share that. Let me see if I have the file and show you what I mean. So here's a Z-score. Let me just bring it up to the screen here and stop share. Bear with me a second. Because I wanna, maybe if you can see what I see, it'll make more sense to you guys. I've shown this to Chris and Margot, who I see here as well. I've shown this to her also. Okay, so where's the Zoom screen? I have too much stuff open. Okay, so here we go. This is what I see. This is all the reasons. And this includes 24 as well, because I used the previous year as a benchmark. So with 24, I had 23, and because I want to know what readings I should pay attention to. So this is showing 24 and 25. Now, this is a reading. This sucks because I need pointers. And I know Zoom can do that, but I suck at them. But this here, right here, this is the high reading in April. This is 4.7. So the reading is 3.23. And you can see that it's surrounded by high values. The cutoff, the 1 mark, is right across here. Thanks, Chris. You're awesome, sir. So that's the cutoff. And you can see that we have, this is what, a low forecast or high forecast? This is a low forecast, actually. So it has a high reading for a low forecast, and it's surrounded by high values. We're not, and this is an 80-day cycle. We're not going to have we're not going to have an 80-day cycle low on 7th of April, and then another 80-day cycle low, like within a few days, 11th of April, and another 80-day cycle low on the 16th, and another on the 23rd. That's not how it's going to be. It's going to be 1. So what do? You pick the highest date here. And then you have to know that if you have a high reading like 3.09 or whatever this is, then it's going to be surrounded by high readings too, which means overall, this area around mid-April is a high probability. Well, according to this, it's a low, actually. It's not even a high. I would say it's one of the highest readings for a low. Then we'll have 329, 2.74 for a high. Now, this is when I like to overlay the actual cycles. Normally, by this time, which is late March, early April, Bitcoin would be rallying. It started the 320-day cycle rally, or 16-month rally, started that in September. By late March, early April, it should be ending that rally. So that's why I say, I think this rally lasts until late March or early April. I have forecasts for both highs and lows around that date. But if I look at the cycle picture, Bitcoin should not be bottoming out around this time. It should be topping out. But again, if that's wrong, if the VTL gets crossed, that's why you can't rely too much on either one of these. The cycles are always king. The cycle picture dominates. This is just for reference. This is just for us to know, to make very educated guesses as to when it's going to turn. But it doesn't tell you anything about direction. I mean, look at all the lines. There's too many lines. If I make the cutoff, obviously, it's what I shared with you on the file. But this is what I actually see. It's just an index with a ton of dates. And what you want to see is the spikes. And you also have to know that most of these will not produce 80-day turns. They produce some turns. So I've noticed that 80% of readings above 1 produce at least a 20-day cycle turning point. So most of these dates, like 4 out of 5, they do produce a turning point on a cycle, but not the 80-day cycle, a 20-day cycle. And then there's 1 out of 5 that doesn't do anything. Markets just ignore it completely. Now, usually they don't ignore it at all. In my experience, when you watch what happens around these key dates, something always takes place. Something important takes place. It doesn't have to be a cycle turning point. But I'll admit, doing that type of study will take me months or at least weeks. I don't even have time. But I'd like to do it at some point. I like to think that I'm doing it in real time. Whenever I have a key date, I like to see what happens around that date. Now, again, January was pretty empty. You can see here that the only turning point that I shared is this one. And just so you know that I'm not bluffing, I'm not messing with you when I said we had 2 more readings in January, but they're below the cutoff. It's 103 for January 4th, actually. It's not the 3rd. And then we have another one here that's almost 1. And the reading is, come on, it's 96.96. And then the one from that's upcoming now, this Sunday on the 26th is 0.89. So these are kind of valid. I would say there's a good chance Bitcoin doesn't break out this week. It just kind of consolidates into next Monday, and then boom, it breaks out on Monday. That could happen because these readings do seem significant, especially since the whole month is empty. And then you have these bellies here. You have this one here, and then there's another one here in September. So that's kind of unusual. It's like a cluster of high, super high readings. You can see this one here, this needle here is August 6, 2024. This crash that happened halfway through the summer. It's this needle here that you see here. It's quite remarkable. You can see that we don't have anything that looks anywhere near as dramatic in 2025. So yeah, these spikes, these highest readings, when you just look at it and the 3 or 4 dates that jump at you, you tend to see something happen. Listen, what could happen is Bitcoin rallies into this date here, 329, so late March, then it crashes into some type of low in the first week of April. I mean, that's what happened here. Basically what happened in 2024. All right, let me go back to the price action. If you want, I'll share the whole file. I want to share something that is actionable and useful, and I don't think this cluster of dates, this index, you got to make sense out of it. So I'm trying. The file that Perry put together is awesome. That actually I think condenses all that information. But as you can see, there's a lot more. There's a lot more. So anyways, eventually I'll settle on a method to find these clusters, these dates. All right, so Perry working through these questions. On that August 17th, 2023 mini crash, was that because other people saw price dip below the VTL? No, I don't think so, Perry. Nobody's looking at those VTLs. At least I don't think. Yeah, I don't know that many people had the line. It's not a self-reinforcing prophecy is what I'm trying to say. I doubt it. It could be, but I don't think so. And regardless, it doesn't really matter. Prices don't usually crash because prices cross a VTL. That's very unusual. It can happen, but it's usually it's what I like to call an early signal, which means a VTL crossover looks exactly like what we saw here in mid-June. Like nobody's paying attention. My model is issuing a yellow flag saying, hey, you're entering deep correction territory, and nothing happens. And I remember that because I had days to hedge. I had 3 or 4 days to hedge. And prices, there was a lot of call skew, which means nobody was buying puts in mid-June. Nobody. These puts were extremely cheap. Like I always buy them out of the money. I got an exit at 66. I think it was 66 or 60, something like that. I was buying 65 puts and 65s and 64s. Very cheap. So I was like, man, this is good. Nobody knows that this happened. So it was an early signal. Usually the VTL is a very early signal. So if this VTL is confirmed and if prices cross below it, I would say nobody's going to ring any bells when it happens. It's just going to go like that, you're going to cross below it, and you're going to have 3, 4, 5 days to bid those puts. They're going to get a great price on the puts, which, by the way, we can all buy puts now because BlackRock ETF has, I think it's one of the most liquid options markets now. So anybody in the States can hedge their Bitcoin now. So you got no excuses. Crosses the VTL, buy some puts if you hold Bitcoin. Anyways, reminder, so where's the existing 80-day VTL, not the potential orange dashed one? Great question, Barry. Where is the current VTL if we ignore this dashed line? It's actually, I think it's pointing down. So That is a great question. It's down here. Yeah, it's pointing down. It's this low here, connected to this low here. This is how you do it. This is, let me show you exactly how my algorithm does it. It connects the two lows, and then it adjusts the line so that it's tangent. So it actually goes all the way like that. Make sure that it's not crossing below the price action. And then it would settle on this line right here. And that's your VTL. It's pointing down or kind of flat. When this happens, I like to say there is no VTL because it's just a sideways level. Not only is there no VTL, this is this orange line is the current 80-day VTL. This one, the black line, is the 16-month VTL. And guess what? That one is a bear market indicator. Prices cross below the black line. We're in a bear market. I'm not saying the bull market is over. I'm saying we're in a bear market. You should short. You should sell on strength. It's currently sitting at the 70K level. This line, if I'm not mistaken, has been crossed 3 times in Bitcoin history. All 3 coincided with bear markets. There's one exception in 2017 because there is no black line, which means you substitute for this black line, which is the 16-month VTL. Sorry, FLD. You substitute for this. If you can't have a VTL, you can't draw it. That's the thing about VTL. Sometimes you can't draw them. Then you substitute for this. Not the case. We actually have pretty solid 16-month lows. We have the black line. This is the bear market indicator. So what I'm trying to say is, Perry, amazing question. When you find a situation where your 16-month VTL is higher than the 80-day VTL, this is what happened. This is the present situation. You just ignore this. You throw that away. Now, usually this is the right configuration. In other words, the 80-day low VTL always going to be higher than the 16-month VTL, always. So, which leads me to think that prices will not, that this VTL will eventually be confirmed. Because this situation that we have now is an anomaly. This is not what you normally see. The 80-day VTL, it makes sense if you think about it. The 80-day low VTL is always going to be sitting above the 16-month low VTL because the 16-month VTL is a much slower cycle. I don't know if anybody has noticed this, but there's a lot of parallels between the VTLs and the FLDs. In fact, sometimes the VTL and the FLD are saying the exact same thing. They line up. Sometimes you don't have to draw a VTL because the FLD is literally overlapping it. In fact, this is something I want to get to in just a minute. But I have this, like I'm calling it cycle model 2.0. It's a computer model. It has nothing to do with what I teach. It's based on the same principles, but it's much more powerful. And I'm able to code and execute automated trading strategies. And it's interesting because for the most part, with the exception of the 80-day trading strategy, but if you're trading on a 20 or a 5-day cycle, it actually makes no difference whether you use an FLD or a VTL. It's the exact same thing. So the moving average and the trend line, they're always saying the same thing, which is a good thing. They're kind of redundant. Why is that a good thing? Because if you can't use the line, you can use the moving average, basically. Can't draw the trend line, use the moving average. You can always do a moving average. Now, you might ask me, why not use the moving average then? Well, when they're different, in those cases where they're different, it looks like the trend line is telling the truth. In other words, when the FLD and the VTL are overlapping, great. Usually they are. If they're not, pay attention to the VTL, not the FLD. I don't know why that is. But
yeah, can I say something on that?
Sure, go ahead.
Here's the way I think about it, because I structure the entire world into logical levels, just the way my mind works. So with this, there are like levels of abstraction. So I'll put it like this. The further away you get from pure price action, the less reliable it is. The more kind of into the clouds you're getting. So the absolute truth is the candlesticks, right? Because that's pure price action mapped. And then I'd say the trend lines are like the next best thing, but they are a movement away from pure price action. And then the further away you get, like moving averages, you start moving further and further away from the purity of the price. Now, of course, we do that because you want to have like a meta view of what's going on and spot patterns. But you have to have a trade-off between that and the fact that the accuracy decreases. But you have to use both. It's like a right brain, left brain thing. You know what I'm saying? So the decimals are the left brain and the right brain is the patterns. And you have to combine both, which is why technical analysis, yes, it's technical, but that's not enough, right? You know what I'm saying? There was a question earlier on. It's not like technical analysis doesn't cause price movements; it maps them.
Yeah, that's a great way to put
What causes
it.
price movements are human emotion and thought.
Yeah, pretty much.
So anyway,
Yeah,
that's all
it's
I
not the
said.
technical analysis. No, that's a great addition, Chris. Thanks. Great way to put it. So reminder, Perry is saying the model shows the high for February 1 and 2. Are you factoring that in your TA on January now? So, okay, another great question. Let me tell you, Perry and guys, how I'm thinking about Fed 2. There's one or two possibilities, in my opinion. Either the rally is fading and we have enough gas in the tank to top out in early February, or if we see a strong breakout, Fed 2 is just going to be a pause. Now, remember, I don't know if this. Let me explain this logic to you guys. I just showed you what the forecast. You can see that there's a lot of dates on those forecasts. There's a lot of dates, a lot of readings above 1. Just by definition, most of them will not produce 80-day turns. This was my initial problem when I first created this index. I wanted a few dates because I knew that I'm only going to see a few 80-day turns. But I came up with dozens of dates. So I said, okay, this has to be wrong. I mean, this cannot be pointing to 80-day tops. The thing is, what I realized is, okay, fine. I know that most of these dates are not going to produce 80-day highs and lows, 80-day turns. But do those 80-day turns take place close to some of these dates? And the answer is yes. About 95% of 80-day turns, they take place within 5 days of those dates that I shared with you. 95% of them. So most of them take place around those dates. However, those dates in and of themselves, most of them will not produce 80-day turns. Which means if you're doing phasing analysis, which means you're finding cycles, you know that, for example, Bitcoin has broken above, let's say, wake up tomorrow, Bitcoin has closed at 110. It just broke above the last 80-day cycle high from mid-December. It's going to keep going. 92% probability, it just keeps going. Is it going to top out in early February? Absolutely no way. Is nothing going to happen in early February? No. There's about an 80% chance that it stops for a few days. That's what I'm sharing with you. So there's an 80% chance that something happens on those dates, but the probability that a date is going to produce an 80-day turn, that's like 30%. Right? Most of them don't produce 80-day turns. The 80-day turns take place on those dates, but those dates don't usually point to 80-day turns. Okay, it's not a two-way relation. I don't know if that made any sense.
But that's what you were talking about, right?
Yeah.
When you look at the raw data that's completely unfiltered, and then as you dial the threshold up, it removes noise, but then the number of signals also decreases. So if you turn that filter all the way up, there'd be no signals because it'd be too high, right?
Yeah.
And I mean, Perry's done a good job of that by dialing it quite high up, so that it's only the absolute bangers that appear.
Yeah, you just want the highest readings because there's too many readings.
I mean, is that a valid approach, though, is what I'm asking?
Well, based on my 2024 example, yeah. I mean, we basically nailed all the important dates were there. And not only that, you can, and this is what I'm struggling with, creating an algorithm that will turn my own human analysis into actionable information, because I tend to first look at the highest readings. I look at the file, I look at the highest readings, and I know that most of the action is centered around those dates. Then I take it month by month. So January, I have to say, January came up to me when I did the forecast as an uneventful month. Nothing's going to happen in January. Why? Because there are no dates, there are no forecasts, nothing. One thing that I noticed, if there's a lot of high readings, tends to be a lot of let's call it energy, because it's a nice term, a nice term. There's a lot of energy around that period. And so there was not a lot of energy in January. It was weak, mild. I was like, nothing's going to happen. And you can see that January is pretty boring so far. So that was my conclusion. So if I see a lot of high intensity readings and a lot of spikes and a lot of needles and a lot of high and low forecasts, then I know something's going to be happening around those days. So that's a bit of a meta analysis that I'm doing. The fact that there's a cluster of high readings, of high intensity readings, that in and of itself is a signal. That in and of itself means something. January was pretty empty, and so far it's turning out to be pretty empty. I mean, look at today's trading session. It's like a slow climb. It's like a slow climb, and I would not be surprised if 30 minutes before the close, bam, it's just right down to 105, right down below.
There is that's also why it can be a high or a low. I'd use the word stimulation. It's like when the readings are high, you called it, there's a lot of energy. Everyone gets stimulated. But the question is, in which direction will they be stimulated? They'll start getting hyped up, but what will they do with it, buy or sell, right?
Exactly. You don't know. Now, usually I've been able to separate these forecasts. And like I said, it's 80%. It's actually 75-25. 75% chance that a high forecast is a high, 25% chance it's a low, and the same is true in reverse. So actually, when you have a high forecast, 75% chance it is a high, it's not a low. You're looking at a high. So your base case should always be it's going to be correct. If it's saying high probability high, okay, probably a high then. You should only begin to consider that it might be a low if prices are falling, if there's no way that can be a high. Sometimes that happens. Right now I would say if, I don't know, today is January 24th. If Jan 25 was like a reading of 3 for a low, let's just say it was a reading of 3 for a low for tomorrow, I would say, oh man, I think that's going to be a top. It's going to invert. It's going to be a top. Why? Because it's a high intensity reading, so something's going to happen, and it definitely cannot be a low. So because it's rally.
That's what I was saying earlier on about the pure price action. And I was speaking from personal experience here. When I started learning trading, you don't want to gaslight yourself with an indicator, right? Believe your eyes, like you just said, Juan. Even if the indicator says this, you believe your eyes and go, look, this is a top.
I mean, I heard it said best from Ray Merriman. Ray is like one of the grandfathers of using cycles and forecasting. And what he said is, it was a great quote, I'm paraphrasing, but he said, cycles are the emperor and forecasts are the king. But it's always cycles first. Cycle picture first, forecast second. That was super useful to hear from me because I had just developed this. I had just started to use forecasts, and I didn't know how to mix them with cycles. Sometimes they were in conflict, like you said, Chris. I mean, it seemed I was getting readings for lows, and the price was going up. I was like, what am I going to do with all this? And Ray just said it best. He said, cycles are the emperor, forecasts are the king, which means cycle picture first, do your facing, study the cycles, then overlay it with forecasts, not the other way around. You're not going to get any sense of direction or really any sense of what the market is going to do by looking at a spreadsheet with forecasting dates. The truth is in the price action and in the cycle picture. That is the approach that I think and this guy has been doing that for like 40, 50 years. He's saying that, then I'll just believe it. Anyways, I'll keep going. Also, Perry's saying linear scale, log, any reason ever to switch to log? No, not really. I only switch to log if I want to go long-term like that. If I want to look at what happened over the past, 5-6 years. Because if I don't, well, Bitcoin doesn't look too bad actually, but if you keep going back, eventually can't see anything. Turn on the log, you can see the price action. Man, I make out too many drawings on these charts. All right, we're gonna keep going because I only got 25 minutes. Juan, if you dump everything, would you please let us know? Perry, yes, I'll let you know. Now, full disclosure, I tend to trade around my positions. I used to have core positions that I never touch, blah, blah, blah. Cold storage. I used to buy into that. I have a computer model that is pretty accurate. I mean, I pretty much can use the computer model to tell me what's probably going to happen next. So why not use it? So now I actually trade with my core positions. Now I do have cold storage. Most of my Bitcoin is in cold storage. Actually, the vast majority, like 80% of it. I hedge it though. I know what's in those wallets, and I just go in and buy puts for that. So I actually never touch my cold storage Bitcoin. That doesn't mean I don't hedge it though. I do hedge it. And spoiler alert, I hedge when the 80-day low VTL is crossed. I literally, that's when I buy put. That's my signal to buy puts with almost no exceptions. I would say if I'm not buying puts when the 80-day low VTL is crossed, it's because I'm shorting. So I'm shorting my Bitcoin. I'm not even, puts are not good enough. I'm just going straight to going short. Deribit.
Deribit.
Yeah, highly recommended. If not, you can have a brokerage account and trade on IBIT. Let me make a prediction. I think this year the BlackRock ETF will have the deepest Bitcoin options market because they're already like 70% of Deribit, and they've only been around for 10 months. So within another 10 months, the BlackRock spot Bitcoin ETF will have the deepest crypto Bitcoin options market. So that's actually great news because it's a lot easier for Americans, at least. I don't think they can get involved with Deribit, but anybody can have a U.S. brokerage account. I mean, literally anybody. You don't even have to be American. You just sign one of those tax exemption forms, and boom, they open your account. I never use mine, but I still have it. I have to submit paperwork every year because maybe one day I'll use it. Yeah. Doesn't double top mean that there's a smaller cycle pushing down in the center of the peak of a bigger cycle? You have it almost right there, Perry. A double top means there is a bigger cycle pushing prices down. So a double top in this case would mean a 16-month top is pushing prices down. Again, though, all we need, I mean, this is all I'm asking from the gods of trading. One convincing close above this December 17th high. And the odds say there's a 90% chance, 90+% chance, it just goes. It just keeps going. I have the data here somewhere. I can pull it up if you want. Not only is there, if Bitcoin closes at 106, not only is that a more than 90% chance it keeps going, the average go since 2015, so I'm excluding the early years, I think it's like 150%. I can verify that in a second because I have the track. There you go. I have the track record here. Let me just look it up because these numbers are insane. So for Bitcoin, 80-day breakouts, this is what I've been working on, by the way. 80-day breakouts on Bitcoin, 200% average return from those breakouts. So 90% chance if we have a close at 106, 90% chance it follows through. And on average, it follows through by 200%. Now, I would say since this is late cycle, it's not going to be 200%. It's going to be maybe 50 or 60%. But what I'm trying to, but regardless, a higher close on the 80-day cycle is, I think, one of the best trading strategies in crypto and in all markets because it's easy to spot. That's why when Brett and I did our webinar to get you guys into the course, I said, okay, Brett said, okay, you got to give them something useful. And I said, okay, I'll just teach them how to use a filter, how to identify 80-day cycle tops. I'll just tell them, just buy every time. Once you identify that top, just buy the breakout. It's super easy to do. It's super laid back. You basically get 2 trades a year on average, 90% probability of success, and the average return is 200% when it makes money. By the way, it loses 30%. When it's wrong, it loses 30%. But it's win big, lose big. But yeah, there's very high probability that not only does it keep going, it keeps going substantially. I mean, it goes to 150. I'm not saying it's going to break out 90% chance it goes to 110. No, no, it goes to 150. It goes to maybe 200. So it tends to follow through once it breaks out. What is giving me pause now is that technically we have that breakout here on Tuesday, but it's just too close. I don't know that it's ever been.
Mate.
Yeah, it's never been this close. No, because I mean the model, because I have the strategy running on autopilot now. It just issues trading signals. It gave me a signal on Tuesday, but I went in and said, okay, but I would have noticed if it had broken out, and it was like it's barely above. It's valid. It's a valid signal.
Technically, it's valid. That's what I'm saying earlier on. You still have to use your human.
Yeah, you have to use a human. Yeah, that was like, well, if ever this thing was gonna fail, it would be now. But again, I think Chris, you would agree. If we get another close at 106, 107, then yeah, that's you can put those fears to rest. I mean, that is a confirmed breakout at that point. We have two. Yeah, well, one that's too close to call, but sorry, what?
What was spooking me out is yes, pending 80-day cycle low, but I'm not used to, because when you enter a new 80-day cycle, you want a strong rally off the low, right? Now that started to look like what was happening, but I'm not used to it stalling right after that, like this.
It's stalling. That's the problem.
That's what's spooking me out.
Yeah, that's what's spooking me out too. It's just stalling. It's just like it doesn't want to. I mean, look what happened. Because I mean, let's take the equivalent a 16-month rally. We can't look at what happened here. This is not a 16-month rally. This is a 16-month rally. Now look what happens with the breakout. It's just hot knife through butter type price action. That's a good breakout because it doesn't. There's no hesitation. It just goes. It just goes and it goes. Then it paused for a little bit, and it kept going. In my experience, that's what a breakout looks like. It doesn't look like this. Does not look like this. Now, again, what would we be saying if today it goes like that? We would say, all right, yeah. I mean, it's struggled, but acceptable. It broke out. That's a decent signal. That's really what you want to see, by the way. You want to act on. By the way, I didn't make a big deal out of it because I would have announced it on the Discord because I do teach this. So I would have said, guys, we got that signal. The reason I didn't say anything is I don't think we did. It's too close to call. Well, I'm using a Bitstamp feed here, and there is no breakout on Bitstamp. But Binance has the most robust APIs. I mean, they're second to none. So I use the Binance feed for my automated model.
When this, I'm just pointing on the screen here. When this, you see this wick?
Yeah.
When that candle was forming and the body was above, I was like, this is it. Because if that had closed up there, I'd have been like, yes.
Yeah. That would have been, yeah. But this was on Monday. This was on Monday, and apparently people are disappointed that Trump didn't mention. He didn't mention the strategic Bitcoin risk. I was like, dude, are you kidding me? Is that why it's selling off? Is that why it was rallying?
People are so fragile, it seems now. Unless Trump comes out and says, "Oh, we just bought 1 million Bitcoin with US currency," that's kind of what people are expecting.
That's what they want to hear. That's what they want to hear.
And anything else like that,
he created a task force. He signed an executive order tasking somebody to look into this crypto strategic reserve. I mean, what else? Bitcoin did not move with that. And that was yesterday. It tried to break out on the news. It didn't get anything going. I said, okay, that's not good. Anyways, it doesn't mean much. I mean, I'm more of a macro guy. I'm looking at China. The dollar is falling against the Chinese currency. China's collapsing. This keeps going. The Chinese are going to turn on the money printers. The yuan goes down to like 7. It crashes to, I don't think it's going to go to 7. But if it did go to 7, the Chinese would begin to print. And it's bull market on, baby. And from that moment, it's just going to go. Because this whole bull market has been on the back of the Chinese, the Fed holding steady, and the Chinese injecting liquidity. And they're kind of on pause. Now, I don't know if the Chinese are printing right now, because it's hard to get that information. If you want to get it, I recommend Real Vision. Real Vision, they have that, but they don't always publish it. I'm literally subscribed to so they call it the MIT, the Macro Investing Tool. They publish it every week. highly recommended research. It's like a 30-page, easy to read report. And sometimes they talk about China. And I only care when they talk about China. I don't care about the other stuff because everybody talks about the Fed and the, well, actually, it's the Fed and China. Those are the only two that matters. They talk a lot about the US, but not enough about China.
You know that CNY chart you just showed, right?
Yeah, let me go back to that.
It's weakening, but if China prints, that's going to push it down even harder.
No. This is inverted. So when this goes down,
That's
that means the Chinese currency is getting strong.
Right, I got you.
Now look how much stronger it's getting. And after it is post-Trump. So it started to get it strong post-Trump. To me,
that's a dollar weakening though, right?
Yeah, to me, that means, well, it could be a number of things. It could be, I don't think Trump is going to follow through on those tariffs. And I also think that there might be a deal struck between the States and the Chinese. And if that happens, part of the deal is going to have to be to weaken the dollar. It has to be part of the deal because these guys need to print. Problem is the Chinese, if China prints into a falling yuan, it creates an inflation whirlwind. That's not a maelstrom, an inflation maelstrom. So they can't do it. They can only print if the Fed is easing or helping them out somehow. And they're not going to help them directly because China is supposed to be an adversary. They're not going to do swap lines with China. They could do swap lines with Japan because Japan and China, they're tight at the hip. They trade very close to one another. So maybe the way this works is they do swap lines with the Bank of Japan, and most of the dollar credit that flows into China comes from Japan. It comes from Tokyo. So maybe this is how this deal is going to play out. I don't know. I don't want to get too into the weeds. We can get very speculative with this stuff. But I am encouraged to see that the Chinese yuan is getting stronger. It's one of the things I was hoping to see when Trump took office, and we're seeing it. So it gives me hope for the crypto bull market because this ties right into crypto. I mean, if this thing keeps getting strong, the Chinese will, it gives the Chinese room to print, and that makes crypto go up. That makes crypto. In fact, usually you can tell how this market is going to trade based on just the Chinese trading session, the Asian trading session. Just look at the trading session. Whatever happens then, it tells you what's going to happen in the rest of the day. For example, if it doesn't move at all, unless China's on holidays, but if it doesn't move at all during the Asian session, usually that means no action. You're not going to see anything when the US market's open. But of course, the US market is the second. But for cryptos, I would say is the second most important session. The most important session is the Chinese trading hours. That's the key for crypto. Second, the States. And usually the two regions have opposite views. The Chinese are buying, Americans are selling, and Bitcoin just doesn't know what to do. I've seen that a lot. And here in Europe, it's horrible because the Chinese session is like in the middle of the night.
Perry just said
that sucks.
Perry just said Trump and his wifey had their own coins. If that doesn't mean crypto support, I don't know what would. Well, my response to that is that meme coins haven't done us any favors in this cycle because those gamblers would have otherwise put their money into altcoins. Whereas in this cycle, the meme coins have sucked all the liquidity out of the room almost.
Well, let me get to that question because I have a different answer. But that's because I own a lot of Solana. They launched them on Solana, and Solana did this. So I was very happy. I'm like, damn you, Trump. But thank you for that. It was awesome. It went to 300 in the weekend. And if you own this coin, I don't know if you guys know about this one, JLP. Now, this is Jupiter Liquidity Pool. This is basically like owning Solana, but you get paid trading fees. Now look at this. It's at all-time highs. It's only been around for a while, all-time highs. So if you want to own Solana with an implicit hedge and some trading fees sprinkled on top, JLP is for you. Now, it doesn't move as much as Solana, but whenever Solana spikes, it's more sticky. So look at the Solana correction started in like November 20, whatever. Let's call it 20, right? This is when Solana started falling. Now Solana is back to where it was, and this thing is up 20%. Amazing. So Solana is back to where it was in late November. This thing is up 20%. Why? Trading fees and rebalancing. They also rebalance. So they sell on the way up, they buy on the way down. Not that anybody's doing that on purpose, but they have these target allocations. And when the price goes down, you're incentivized to put in some Solana. When the price goes up, you're incentivized to sell your Solana. So what ends up happening is you have basically an index that tracks Solana, but it adds fees on top. And there was no correction for us. I have a much bigger JLP allocation than I have Solana. I don't want to shield this coin too much because, it's smart contracts. Maybe it blows up and everybody loses their money. So I'm not saying go out and buy JLP. I'm saying, though, this is a great way to get exposure to Solana if that's what tickles your fancy. All right, let me keep going because I gotta go. I can go over time a little bit, but not too much. I want to get to some of these, more of these questions. Share the raw data file. Yeah. Perry, everyone, I will share the raw data file with the actual raw data file, not what I shared with you here. That one is a Z-score value. I'm going to share the raw data because Z-scores and raw doesn't mean anything if you're working with the actual values. It doesn't really matter. Okay, derivatives of derivatives is a concern. No. Well, I used to trade a lot of options on futures. I was like, this is the craziest thing, but I did pretty well. You guys are flattering me. Oh yeah, Perry, by the way, I don't know if I got to say this in person, but thank you for that design for the forecast. That's awesome, dude. It looks amazing. Thank you. All right, SL is saying, could increased institutional demand tend to mute the amplitude, decrease the depth of BTC's corrections, raising its low VTL slope relative to sols, giving the appearance of a risk to the bull market? I wouldn't read so much into it, sir. I wouldn't. Let me share another chart of something that has much lower volatility than crypto. That's the S&P E-mini futures. So the E-mini S&P futures. This is how I cut my teeth trading. This is what I traded for years. I only traded this. And look at the space. Now, this is relative, right? But look how far it looks. And it looks like the VTL is very far from the price action. So it tends to be closer when there's lower volatility, but it's still I would say, relatively safe distance. Now, this VTL is, what, 10% maybe? It's 9% below prices, but it's far. This is a healthy distance. This is a healthy looking bull market right now on the S&P mini. If I look at Bitcoin, this tentative VTL is sitting, it's actually closer, but it's 6%. You see what I'm saying? It looks super close, but it's only 6% versus 9%. It should look farther away. Well, this is because those VTLs automatically adjust for volatility. So far and close, these are concepts that we take for granted as humans. There's actually a lot that goes into it.
This 6% is one day in crypto.
Yeah, exactly. So, but we intuitively know that already. We just don't realize that we're doing that. We're adjusting for volatility with our eyes without knowing. I mean, the human mind is the best machine that's ever been conceived. It's not AI or some computer. It's us. We just don't realize how much we do by looking at something. I'm telling you because I moonlight as a developer nowadays, and sometimes I take a trading strategy or just something that I do with cycles that I just think is natural and just take it for granted. Oh, it's super simple. I just sit down and write it down. Turns out I'm doing a lot more than I realized I was doing. I mean, a lot more. I am adjusting for volatility. I'm taking seasonality into account. I'm taking correlations across different assets. I'm taking all of this into account, and I'm coming up with a conclusion. When I want to teach a computer how to do that, super hard. It takes me weeks to even come up with like drawing a VTL is super easy. It took me a couple of days to figure out how to do this accurately. But by hand, super easy. Super easy to do. You just start with the lows. Now that I know the algorithm, I can kind of cheat, but you start with the lows and then you just fit it. Boom. You just don't want it. It needs to be a tangent. It can only touch, a low VTL can only touch the price action in 2 points before it's crossed, obviously.
You don't want a lot of intersections. Otherwise, it's not valid, right?
Exactly. It's not a valid trend line. It's a valid trend line. So it actually took me a lot because how do I teach a computer how to do this? And I know the algorithm now. It's just, you start here and just circle forward. Sometimes you hit there, you still don't have the VTL. When that happens, you got to do this, and you have to loop backwards. You rarely have to do this, but sometimes you do. But by hand, I look at the price action, I go like this, and I go, okay, VTL, right there. That's a VTL. I just know it by looking at it. But it's very difficult. It gets hard fast when you try to write a computer model to do it.
Well, you know what we should do? We should train the computer to do image recognition instead of data analysis.
Well, it does. I mean, AI can recognize images.
I know. That's what I'm saying. Get it to do it like we do it.
Okay, so yeah, but it's not though. I mean, I wrote the model using AI now, and it taught me. I mean, it runs on the cloud as a service, not a service. It's a job. But services can handle HTTP requests. Apparently, this thing cannot by design. It does not interact with the outside world.
Yeah,
it runs on an isolated container, but it spits out trading analysis, trading strategies. It's pretty good. I mean, I'm trading like 12 different things now, whereas I used to be able to trade one or two. So that's pretty cool. And that's something that, before I wrap up, that's something that I wanted to share, is that I'm working on this. I mentioned this before, that I have a computer model that does all this phasing analysis. And up until now, that's all it did. It was just, instead of doing this by hand, which is not really that hard, I would use a computer model. But lately, I've been working on a way to just automate the whole pipeline from data collection to trading, not just the phasing analysis, which is the part that I care about the most. Like, I want to know where the VTLs are. Not that I need to do that, but sometimes it's close. Sometimes it's so close, you just want to know. An example of that was in 2023. Where was that VTL? I think it was here. Yeah, that's it. This VTL. Now, remember what I said. I hedge when prices cross below the VTL. So what do we do about June 15, 2023? Is this a crossover or not? We don't know, right? I mean, it's too close to call. So these are cases when actually on this feed, it looks like it did cross below.
You have to wait 5 days.
Yeah, I usually wait. What I do now is I wait 3 consecutive days, but I begin to hedge on day 1. That's what I do. That's where I settled on now. But I also want to know if it is a crossover. So I run it on my model. And that's what, in the past, this is when I would run it. Days like these, download the data, run the model, see what it's saying, see where the VTL actually is. And in this case, when I ran it on the BLX, on the index, it didn't cross below. In this case, you can see visually that it did, but when you run it with the model, it doesn't cross below. It just almost above. So it's not an actual crossing of the VTL. This is when I used to run it. Now I run it every night at 0:30 UTC. It runs, it trades, it gives trading results, and it issues signals. So it's something that I probably going to share with you guys over the course of the year. Not for now, but only because, well, it's not ready. There might be bugs. So I'm not going to share trading alerts if I don't know if half of them are wrong. So I don't want to have to explain, guys, ignore that one. That's a bug. It shouldn't do that. It's still buggy. I want to go a month or 2 without any changes, any updates to the code before I say, okay, it's ready. And from that moment on, I'm going to start focusing on adding and perfecting the trading strategies. But I was working on developing the full pipeline, again, from data collection, to phasing analysis, to trading results, to a trading log and trading alerts. That's a whole pipeline. There's like 4 different sections. I've been working on that for the past month or so. So it's just focused on that. I wanted to get it done. I finished on Wednesday. Wednesday is fine. When I pushed the thing to the cloud, I ran it, and now it runs every day. No changes over the past couple of days. That's a good thing. I only made 1 small correction with Tron here. Shout out to Tron. This is another great trading vehicle. I hate it fundamentally, but for trading, it's awesome. All right, I think covered everything. Margot, I don't know if you want to explain your lines with the rest of us. I'm gonna allow you to share if you want, but this is all I have to share for this month. Just want to get to this question by Perry. He's saying parallel concept. All price reversals will line up at model predicted dates, but not all model predicted dates will line up at price reversals. All squares are rectangles, but not all rectangles are squares. Perfect. Yeah, that's perfect. That's how you should think about these forecasting dates. But with that, I will, let's see, I'll stop sharing. How do I stop sharing? Where's the Zoom? Here it is. Stop sharing, unpin my thing, and I'm allowing anybody to share now. So multiple
Hey, Juan.
participants. Hey, Margot. Good to see
Yeah.
you.
I mean, if everybody's interested, I'm happy to show.
I want to know.
Yeah. Okay. Here, I just sent my request to screen share.
There you go.
Okay.
You can do it.
All right.
Nice background.
Thanks. Okay. So oops, this is my Bitcoin weekly setup right now. And these are called planetary lines, and the work originated with Janine Long. I posted in the chat a PDF of her book, The Universal Clock. For a person who's not gotten into this work, it will require a little bit of work on your behalf, working through it, but it's really fascinating work. She basically figured out a way to convert planetary longitude into price.
And, oh, nice.
Yep. So the planetary lines can be used as support and resistance levels, although I used to use them that way all the time. What I actually am using them for in this particular circumstance is a timing forecast. If you notice, every time they cross vertically, there's a weekly trend change, and it's pretty reliable. Sometimes, like you said, price action is king. So sometimes you have to know where it's going to end, if it might just be a consolidation period. But this is an incredibly reliable signal. So the next time the event this happens is February 19th. So I have that on my radar for at least a weekly pivot. I know I don't think that lines up with any of your pivots right now.
No, I don't think it does.
But the one I have that does line up with your work is coming this week. And it's both because I use a lot of different techniques too. This is the mean node square of 9, actually, right here, this white bold line here. Again, another trigger that has a high correlation to weekly trend changes. So if we're moving up into this event, that definitely signals some consolidation in early February. We also have these little tags here these are cycle measurements. So I can anchor this tool to any point in time, and then I measure the cycles from that point in time. And again, I'm just finding weekly pivots. So basically the crux of what I do is I'm looking for when the market should make a turn, even if it's a short-term turn. And then I use price action to trade that. So if anybody has any questions about any of that, I'm happy to.
I like the idea of turning planetary longitude into price action. I stopped that because that's all Gann, right? I mean, Gann used to do that.
Yes.
I stopped that work when I realized I don't know how to do that. I mean, I need a, I mean, I can come up with a way to do it, but I need a solid, like a sciencey way to do that. I can't just pull it out of my ass.
Yeah. What's really cool is that the tool, like I do have to run calculations to set it properly, but the tool runs it for me. I don't have to figure out what is the planetary measurements of Mercury. This is from some software that I use that's called Time Trades.
Yes, I've heard of it. I think you mentioned it.
So you can set your degrees or your dollars per 360 degrees. And then there's a lot of techniques that I picked up through studying Gann and Jenkins and Bear and people like that. So you use variations of 360. So when your asset is much more expensive, like Bitcoin is 105,000 right now, I'm using 10,800 because 360 times 3 would be 1,008. And then you convert that up to 10,800 because GAN rule is you can always move the decimal. So anyway,
Yes.
that's how I find the measurements of how to, and really, I mean, they're pretty accurate as far as giving support and resistance. So anyway.
Yeah, I like that because you're right. I mean, when they converge, I don't know what's happening, but I can see that the pattern is kind of converging or something. And
Well,
it
what's
seems
happening-
like something happens when that happens.
What's happening is heliocentric and so this is heliocentric measurements, all from the sun's perspective instead of from Earth's perspective. So,
Uh-huh.
and the reason we use heliocentric is because there's no retrograde motion. It's very steady. So
Yeah.
when heliocentric Mercury completes 360 degrees of travel, that's what happens on these vertical lines. So essentially it's heliocentric Mercury ingress Aries, because Aries is 0 degrees, right? And
That's
then
it?
that's it. Yep. And then because heliocentric Mercury, because of the elliptical orbit of Mercury, where they cross here in the middle, this
Mhm.
is 180 degrees of travel through the zodiac. And so because of the elliptical orbit, because it slows down and speeds up at different points in its orbit, that's why it's not exactly 50%
I'm going
through.
to say, well, it explains the shape.
Yeah, exactly.
It's like a bow, but it's skewed to the left.
Yep.
Yeah.
And
Like a
then
bow
you can
tie,
see that
you
you
know.
also tend to get weekly shifts in momentum and trend here at the 50% level.
Mm.
So it's really mind-blowing applying planetary cycles to the tools. And what I've been doing since I started studying your work, Juan, it's been really, really, it's leveled up my work. And plus studying with Ray too, back last fall, is just taking the time cycles and then applying my harmonics and measurements and planetary cycles on top of it. And I do find that I'm able to get the trend changes usually within a week or even a few days, because I also do this on the daily, so I have a daily chart that is, equally as fancy.
Mhm.
Interesting. So, and so it's late February then. I'm just trying to look if I can
Yeah,
see
so
anything on this forecast, but I don't think.
February 19th is the heliocentric Mercury. It's the moment that it makes a transition into 0 degrees Aries. And if you notice, I've got these measurements. So basically the way these work is like, wherever you see a cluster of them, like see how there's a bunch of them here,
Mhm.
we get
Yeah.
we get choppy price action, right?
Yeah.
So, and then
Yeah.
when
I
there's
noticed
a
that too.
gap, when there's a gap, you get a directional move, right?
Mhm.
So I was anticipating a little bit more of a directional move, much like you were saying in today's AMA, is like, this was pretty lame.
Yeah, agreed.
It's
100%.
concerning because this should have been a nice directional move as we move into next week. I have a pivot which aligns with your high. And then we get another one February 10th, and then we have heliocentric Mercury February 19th, and then we have another one February 24th, which tells me that February is going to potentially be choppy.
Hopefully not. I mean, if it's choppy above 106, I don't care. Just go to 110, consolidate, and then I don't care because I have the VTL. I just want, I was telling my wife the other day, I just want to be able to draw that VTL because once I do, I know when I'm going to exit.
Yeah.
I got in at much lower prices. That's my exit. I'm happy about 100K, but I'm just right now just biting my nails because I'm like, no, I can't get out yet because I don't have the VTL. I need
the
that
worst case
breakout.
scenario, right, is if the price goes sideways and crosses the VTL. That will be so frustrating to me.
Yeah.
If it's a nice red candle, I know, but if it's like a cross by default, just because it chops sideways, that's so frustrating to me because it's just not clear.
It's good if
Juan,
you're hedging,
what's your rule about that? Oh, for hedging. Okay. Yeah.
Well,
because
for hedging, it's the best. You can get basically slightly out of the money puts.
That's a good goal.
Slightly out of the money puts for nothing. I recommend to buy them 45 to 60 days out because historically, crosses the VTL, you're going to get a sell-off within 45 to 60 days. Within. I can be the
Yeah.
next. It can be 7 days after, or maybe you have to wait a month, but you're gonna get it. You're gonna get that dramatic. Sometimes you get more than one. So I like the sideways crosses because it gives you, because that means you're preparing and nobody else is.
It's a good call. It's a good call.
Yeah.
That's a good call.
Yeah.
That's a good one.
Cool.
Yeah. That's
Well, that was fun.
that was fun as always. And now I gotta go. I got a 90-minute drive ahead of me. Loved it as usual. This is all gonna be in the recording, so everybody can see it. And we'll schedule the next one. I'm gonna be traveling. I'm gonna be in my home country in Uruguay. So it's gonna be a shitty internet and an even shittier camera, but I'll still make it. All right. So
Awesome.
Margot, thanks for sharing. You're doing
Bye.
awesome
Margot,
work.
that's
So
amazing.
thank you so much for being here, everybody. I'll see you all in a while. Bye.